Greetings to all our listeners on StockExplorers. Today we're diving deep into Astera Labs, ticker ALB.
Yeah, they've become quite a significant name, especially in the AI and cloud infrastructure world.
Exactly. So our goal here is to really unpack their business, understand why they matter for potential investors, and, highlight the key things you should be watching.
Absolutely. We'll look at the business model, positives, negatives, and those crucial milestones ahead.
And we'll definitely aim for a balanced view covering both the opportunities and, of course, the risks involved.
Right. So Astera Labs, at its heart, it's about this intelligent connectivity platform.
Okay, what does that actually mean in practice?
Think of it as the critical infrastructure, both hardware and software, that tackles performance bottlenecks and systems drowning in data, especially important for AI.
Got it. Like the nervous system for these big data setups.
Precisely. You need smooth, fast communication, and that's where they come in.
So let's talk products. They have a few key families, right? Starting with Aries.
Yes, Aries. So imagine sending a super fast signal down a wire. It degrades, right?
Uh-huh.
Aries acts like a signal booster and conditioner. There's smart DSP retimers, smart cable modules, smart gearboxes. They all help maintain signal integrity over longer distances, essential for things like PCIe, up to Gen 6, and CXL.
PCIe 6, CXL, these are the latest high-speed standards.
Exactly. And the faster you go, the shorter the distance the signal travels reliably. Aries tackles that fundamental physics problem, gives designers way more flexibility.
Okay, Aries for signal conditioning. What's next?
Scorpio. These are their smart fabric switches. Think air traffic control, but for massive data flows.
Okay.
They have two main types. The P series handles mixed traffic GPUs, talking to CPUs, storage, that kind of thing. That one's shipping now.
And the other?
The X series. That's more specialized, optimized for direct high-efficiency communication just between GPUs in those big AI clusters. That's ramping up production in 2026.
So Scorpio manages the data flow within these powerful systems, a step beyond just boosting signals.
Definitely. Then there's Leo. CXL smart memory controllers. Memory access is often a huge bottleneck in AI.
Right, getting data to the processors fast enough.
Exactly. Leo aims to fix that, offering smarter ways to manage and even expand memory. They're in pre-production now, aiming for a ramp in the second half of 2025.
And Taurus, that's Ethernet, right?
Yeah, Taurus focuses on high-speed Ethernet connectivity using their smart cable modules. And that part of the business saw really strong growth in Q1 this year.
Okay, so Aries, Scorpio, Leo, Taurus, hardware components.
Yeah.
But you mentioned software too.
Critically important. The Cosmos software suite, that's the intelligence layer. It lets customers manage, optimize, monitor, and secure these complex connectivity setups.
And strategically, they're moving beyond just selling parts.
That's the key shift. They started out more focused, on things like the Aries retimers, but now they're positioning themselves as a platform provider for the whole AI compute rack.
Owning the connectivity layer, essentially.
Right. They want to be the go-to for all connectivity needs in these systems. That platform approach, if successful, could mean much stickier customer relationships, deeper integration.
Makes sense. And the business model, how do they make money?
They're Fabless. So they design all the complex tech in-house, but they outsource the actual chip manufacturing.
Standard semiconductor model.
Pretty much. Revenue comes mainly from selling these semiconductor products: Aries, Scorpio, Leo, Taurus. There's a smaller slice from services like engineering support.
And the growth has been?
Explosive, frankly. 150% year over year in 2022. And just look at Q1 2025, 144% year over year growth. Huge demand.
Wow. Who's buying this stuff? Who are the customers?
The big names. Hyperscalers, your major cloud providers, OEMs building the servers, data center operators themselves, then also telcos, financial institutions, research labs, anyone needing serious high-performance computing.
Oh, geographically.
Focused on North America, Europe, Asia-Pacific. Interestingly, in Q1 2025, Taiwan, China, and Singapore were really significant revenue contributors.
Okay. And their big picture goal, what's the mission, the vision?
Well, the stated mission is innovative analog semiconductor solutions, but the vision, to be the #1 provider of connectivity for AI and cloud infrastructure.
So moving beyond just components inside a server.
Definitely. They're talking fabric-level solutions, connecting accelerators across data centers, even exploring things like PCIe over optics for much longer distance connections.
PCIe over optics, interesting.
Yeah, potentially connecting things 50 meters apart or more at high speeds. They see themselves as a global leader in this purpose-built connectivity niche for AI and cloud. They point to design wins, traction with Scorpio, addressing both scale-up within a server pod using PCIe, and scale out between pods using Ethernet.
So what makes them stand out? What's their edge?
Several things. First, that integrated platform hardware plus the Cosmos software. It's not just individual parts, it's a whole system.
Right, the cohesive solution idea.
Exactly. Second, they have this patented software-defined chip architecture. They embed microcontrollers and sensors right on the chips.
Built-in intelligence.
You got it. Allows for real-time monitoring, diagnostics, even adjustments on the fly. Think less downtime, more efficiency for operators. This hardware-software synergy creates what they call a smart connectivity backbone. Scalable, customizable, plus they emphasize reliability, security, QoS, and those real-time monitoring and fleet management tools in Cosmos are a big differentiator.
And it's all purpose-built for AI workloads, you mentioned.
That's key. Not just general-purpose connectivity, but specifically designed for AI's unique demands. And being early with tech like PCIe 6 gives them a potential first-mover advantage as the ecosystem builds out.
It really sounds like more than just selling silicon. Now, you mentioned UALink earlier. That sounds important.
Very important. UALink Ultra Accelerator Link. It's an open standard developed by a consortium. Astera Labs is a promoter member right at the core.
And the goal.
To create a standard way to connect potentially thousands, well, up to 124 AI accelerators together very tightly within a computing pod.
Wow, 124 accelerators.
Yeah. Astera sees it as fundamental for the next generation of large-scale AI. They think it blends the best of PCIe's memory handling with Ethernet speed.
And their timeline.
They're targeting product samples in 2026, hoping for revenue by 2027. They're talking about a potential multi-billion-dollar market just for UALink by 2029.
A multi-billion-dollar opportunity. That certainly highlights their ambition.
Absolutely. It shows they're thinking way ahead, trying to shape the future of AI connectivity.
Okay, let's switch gears to the financials. How did they do recently? Q1 highlights.
Very strong. Record revenue in Q1 2025, $159.4 million. That's up 144% year over year and 13% sequentially from the previous quarter.
What drove that growth?
Broad demand, really, both their PCIe scale-up and Ethernet scale-out solutions, and they specifically mentioned strong momentum with Scorpio.
And compared to expectations?
They beat analyst estimates, both on earnings per share and revenue, and importantly, this is the fourth quarter in a row they've done that. Suggests good execution.
4 consecutive beats. That's a solid trend.
Can we get a bit more detail on the Q1 numbers? Sure. Revenue, $159.4 million. GAAP gross margin was about 75%, slightly lower year over year, they said, due to product mix.
Okay.
GAAP operating expenses were $108.1 million, actually down year over year, mainly because of lower stock-based compensation after the IPO, though R&D spend and headcount did increase.
And the bottom line?
GAAP operating income, $11.3 million, that's a 7.1% margin. GAAP net income was $31.8 million, a big swing from a loss a year ago. GAAP EPS came in at 18 cents per diluted share.
And the non-GAAP numbers, the ones analysts often focus on.
Right. Non-GAAP gross margin also around 75%. Operating expenses $65.6 million. Operating income $53.7 million. That's a healthy 33.7% margin. Net income $59.6 million. And non-GAAP diluted EPS, what about their cash situation?
Looks solid. End of March 2025, they had $86.4 million in cash. But if you add in marketable securities, their total liquid assets were around $925 million.
And cash flow, debt.
Positive cash flow from operations in Q1, $10.5 million. And importantly, they have more cash than debt on the balance sheet. Good position. What are they guiding for next quarter, Q2?
Revenue between $170 million and $175 million. Gross margin expected to stay stable, around 74%, both GAAP and non-GAAP.
Okay.
They are guiding for higher operating expenses, though. Explicitly said they're accelerating R&D investment.
Investing in growth.
Exactly. Non-GAAP diluted EPS guidance is $0.32 to $0.33, which seems to be generally ahead of what analysts were expecting.
And that year-over-year revenue growth has been consistently strong.
Oh, yeah. Q1 was 144%. Full year 2024 was up 242% over 2023. It's been meteoric growth. The big question, of course, is sustainability. Can they keep that pace up?
Right. What's their market cap sitting at currently?
Roughly. As of early May 2025, it was fluctuating somewhere between, let's say, $10.9 billion and $11.8 billion.
So a decent size, reflecting that growth optimism.
Absolutely, which also means high expectations are baked in.
Based on Q1 results and Q2 guidance, what's the implied annual revenue run rate?
If you sort of extrapolate, it's trending towards maybe $700 million for the full fiscal year 2025. That seems broadly in line with analyst forecasts, too.
Okay, $700 million run rate. Now, the elephant in the room for many growth stocks, valuation. Any concerns there?
Definitely a key discussion point. Their price to sales ratio, whether you look backward or forward, is high, significantly higher than the semiconductor sector average.
So analysts are flagging it as expensive.
Some are, yes, using terms like not inexpensive or potentially overvalued. But the counter argument is that you're paying a premium for that pure play AI infrastructure focus, the stellar growth rates, and frankly, the scarcity of companies like this in the public market.
So that's a growth premium argument. Investors need to decide if the potential justifies the price
Precisely. You have to weigh that high potential against the current valuation.
and their track record on hitting numbers. We mentioned the 4 beats.
Right. That consistency does provide some comfort about their ability to execute. They've been delivering on expectations recently.
Looking ahead to Q2 again, what's the general analyst view on their GAAP financials?
Seems generally aligned with, or maybe slightly more positive than, the company's own non-GAAP guidance. The overall sentiment seems positive on continued growth.
Okay. And share count, expected shares outstanding for Q2.
They guided to about 178 million weighted average diluted shares outstanding for Q2, important for calculating those per share numbers.
We noted the strong non-GAAP operating income in Q1. Did that likely beat estimates too?
Given the significant beat on non-GAAP EPS, it's highly likely yes. While we don't have the specific consensus number for operating income here, the EPS beat strongly implies the operating income beat expectations too.
And the implied guidance for Q2 adjusted operating income.
Based on their revenue, margin, and OPEX guidance, it looks like an implied range of roughly $50.8 million to $56.5 million.
Got it. Last in financials, tax rate outlook for Q2.
They guided to around 21% for GAAP and about 10% for non-GAAP. That difference often relates to things like stock-based compensation treatment.
Okay, so summarizing the financials. Strong growth, improving profitability, solid balance sheet, but a high valuation and questions about sustainability.
That's a fair summary. While analysts project continued strong revenue growth, you have to consider the risks. Dependence on the AI cloud markets means they're tied to that cycle. Revenue could fluctuate quarterly.
And margins.
Margins are very healthy now, around 75%. But there's a question mark about whether that can hold as the product mix shifts, maybe more towards hardware modules. We saw a tiny dip year over year in Q1 GAAP gross margin, which they attributed to mix. They even said they expect a wider range going forward as the portfolio diversifies.
So sustainability of both growth and margins are key things to watch.
Absolutely critical for long-term investors.
All right, let's dive back into the technology side. Products, innovation. They seem really focused on PCIe Gen 6.
They are. That's the next big leap in speed for internal connections. They're ramping production now on several PCIe 6 products.
Which ones specifically?
Their Scorpio P-Series switches are shipping. Aries 6 retimers are shipping. Aries 6 smart cable modules are in pre-production. And they just added Aries 6 smart gearboxes. Those help bridge between different PCIe generations.
And these are going into?
Initial shipments started in Q1 for merchant GPU platforms. They're really pushing to be an early leader in PCIe 6. Capturing that first mover advantage is key in this market.
And Scorpio switches seem central to connecting things inside these AI servers.
Hugely important. The P-Series handles that mixed traffic in the head node, supporting up to Gen 6, helps maximize GPU use. The upcoming X-Series, ramping in 2026, is purely for GPU to GPU, optimized for efficiency in big clusters.
What are the claimed benefits?
Line rate speed for peer-to-peer traffic, better visibility through Cosmos, better signal integrity, ultimately getting more work out of those expensive GPUs.
And the collaboration with NVIDIA on their Blackwell MGX platform. That sounds like a big win.
It's a massive validation, integrating Scorpio P-Series into NVIDIA's modular MGX design that helps performance, scalability, deployment speed for those cutting-edge AI servers.
Boosts efficiency of the Blackwell GPUs.
Right. They showed it off at NVIDIA's GTC conference. It really aligns them with the market leader, strong signal.
They also seem very focused on making sure their tech plays well with others. Interoperability.
Crucial. Their cloud-scale Interop lab is all about that. They test their PCIe 6 stuff, Scorpio, Aries with everything. GPUs like Blackwell, CPUs, NICs, SSDs from Micron, Samsung, Test Gear. the works.
And they demonstrated this working end-to-end.
Yeah, they did the first public end-to-end PCIe 6 demo at GTC, connecting their tech with a Blackwell GPU and a Micron SSD. That gives customers confidence, reduces risk, speeds up development.
So just to confirm, Scorpio P-Series and Aries 6 retimers are currently shipping for GPU platform.
That's right. Both shipping production ramps underway as of Q1, and Aries is often called the gold standard for retimers, known for extending that signal reach significantly.
Okay. Can you quickly break down PCIe scale-up versus Ethernet scale-out again and where Astera fits?
Sure. Scale-up is about making things faster inside a single server or a tight cluster. That's where Aries, Scorpio X-Series, Future UALink, and Leo CXL fit in, boosting internal bandwidth and memory access.
Got it. Inside the box.
Right. Scale-out is connecting multiple boxes or pods together across a network. That's where Ethernet comes in. Astera addresses this with their Taurus modules and maybe future Ethernet Scorpio switches.
And they're seeing demand for both.
Strong demand for both, yes. Different AI architectures need different approaches.
That Interop Lab sounds like a key asset.
Hmm?
Any other recent achievements there besides the PCIe 6 demo?
That demo was the big recent highlight, really showcasing their leadership and readiness for the next generation. It's a continuous effort, ensuring their stuff works reliably in complex real-world systems.
So how does all this tech fundamentally address the crazy demands of AI and cloud?
It's about hitting the bottlenecks. Aries tackles bandwidth and signal integrity as speeds ramp up. Scorpio manages data flow efficiently in big clusters. Leo breaks memory logjams. Taurus enables scalable networking. And Cosmos provides the smart management layer over it all.
Each piece solving a specific problem.
Exactly. Together, they enable the performance and scale AI needs.
And it sounds like they're not resting. Plans to accelerate R&D.
Definitely. They're doubling down, strengthening the core platform, expanding the PCIe 6 portfolio gearboxes, optics investing heavily in UALink, looking ahead to PCIe Gen 7, 800 gig Ethernet, CXL 3.x.
Wow, staying ahead of the curve.
And enhancing Cosmos constantly. It all feeds that vision of owning the connectivity infrastructure.
Okay. One last tech question. What are the specific advantages of the Scorpio P-Series switch?
Well, it's the industry's first PCIe 6 fabric switch. It's AI optimized for that mixed traffic, supports multiple PCIe generations for backward compatibility, offers low latency peer-to-peer, advanced monitoring via Cosmos telemetry, diagnostics, robust interoperability, future-proof design, predictable performance per watt.
A lot of claimed benefits.
Yeah, mostly qualitative claims, but it paints a picture of a highly capable, purpose-built solution for these next-gen AI systems.
All right, let's talk market position and competition. Marvell often comes up. How do they stack up?
It's a good comparison. Aster is laser-focused on that AI connectivity platform hardware plus Cosmos Marvell. Much broader portfolio, strong in optics, big data center growth from custom AI silicon and connectivity, too.
Different strategy.
Very different. Some analysts see Marvell as maybe more attractively valued right now, lower forward PS ratio. Both face geopolitical risks, say, in China. But Astra's edge is meant to be that specialization, the integrated AI platform, maybe more agile in that specific niche.
Seems like a hot market. Who else are they competing against?
Oh, it's intense. Lots of innovation happening. PCIe 6, CXL, Ethernet, UALink, optics. Besides Marvell, you've got giants like Broadcom, specialists like Credo Technology. The retimer market alone is forecast to grow significantly.
So competition is heating up.
For sure. As AI infrastructure gets bigger, the big players are focusing more here. Success will come down to tech leadership, customer relationships, speed to market, and proving that interoperability.
How well placed do you think Aster is to really ride this next wave of AI connectivity?
Strategically, they look pretty well positioned. That critical connectivity supplier for the entire AI rack message resonates. They got out early with PCIe 6 switches. They're deep into UALink development.
They see a big market opportunity.
Huge. Talking substantial TAM by 2028. Lots of greenfield opportunity in AI fabrics. That multi-billion-dollar UALink potential by 2029. But again, execution is everything.
Still, that increased competition must be a worry.
It absolutely is. Larger companies have more resources, deeper pockets. Astra needs continuous innovation, flawless execution, really strong customer ties, and leveraging Cosmos is a key differentiator to hold them off. Their size could be a challenge, too.
What's the perception of their market share or leadership?
Generally seen as the leader in PCIe retimers, Aries is often the benchmark, viewed as a key, critical supplier in overall AI connectivity. Launching the first PCIe 6 switch adds to that leadership claim. No hard market share numbers here, but their tech achievements and focus give them a strong position.
How do they differentiate from those larger competitors then?
It comes back to that dedicated AI cloud focus, the integrated hardware-software platform, that software-defined architecture giving flexibility, agility with new standards, and deep collaboration with customers, tailoring solutions specifically for AI needs.
Partnerships sound absolutely vital. Can you recap the key ones?
Hyperscalers and OEMs are #1 design wins, revenue, market insights. NVIDIA is critical, especially the Blackwell MGX integration, ecosystem partners, CPU, SSD vendors for interoperability testing, and the UALink consortium for standard setting and market access. All crucial.
How does Astra compare in perception to, say, Credo technology, also in high-speed interconnects?
Both are in that space. Credo has real strengths in SerDes technology, active electrical cables, AECs, optical DSPs. Astra positions itself with a broader, more integrated platform switches, CXL controllers, Cosmos software aimed at the whole AI rack's complexity.
So Astra aims for more of a system-level solution.
That seems to be the perception, yeah. More comprehensive for the whole rack connectivity challenge, while Credo might be stronger in specific interconnect components or optics. Danilfin's AI stock score even favored ALAB over CRDO at one point, for what it's worth.
We've heard about design wins. Any specific examples mentioned?
They talk about wins across AI platforms generally. The NVIDIA Blackwell MGX integration is the big public one. They've qualified their PCIe 6 solutions with top AI cloud customers. Hyperscalers are adopting their Aries gearbox, and those initial Scorpio P-Series Series 6 shipments for merchant GTUs are key proof points.
Would you describe them as a rising challenger?
They don't use the term, but yeah, it fits. Relatively new entrant, disruptive tech focus, rapid growth, targeting high-value niches. They're definitely challenging the established order in AI connectivity.
Okay, let's look at their growth strategy and opportunities. What are they highlighting from recent earnings calls?
Key themes are expanding the product portfolio to cover the whole AI rack, custom ASICs, and merchant GPUs, accelerating R&D, strengthening the platform, pushing into new tech like PCIe 6 over optics, UALink, capitalizing on scale-up interconnect demand, driving PCIe 6 adoption, leading in UALink, strengthening partnerships, diversifying revenue across platforms and products.
And a commitment to grow faster than the industry.
Exactly. Through increased R&D and these strategic moves.
And the UALink expansion plan seems central to that long-term vision.
Absolutely. They see UALink as potentially transformative. They're active in the consortium over 100 companies now, aiming to provide that open memory semantic fabric for scale-up AI up to 10,024 accelerators.
Leveraging their silicon expertise for this new standard.
Right. They see that multi-billion-dollar TAM by 2029 and want a big piece of it. They're communicating the strategy actively.
How does this all tie into capitalizing on the boom in AI servers and data centers overall?
Their strategy is simple. Be the premier provider of the essential connectivity these systems need. Address the bottlenecks. Offer the complete intelligent connectivity platform hardware plus Cosmos. Focus on the whole rack. Enable next-gen tech through close collaboration with the big players. Basically, make themselves indispensable.
The CEO mentioned new opportunities for scale-up interconnects. What does that mean specifically?
It's the growing need for more bandwidth and lower latency within AI servers or pods. Think UALink for huge clusters, increasing complexity of PCIe CXL, technologies like PCIe over optics for longer reach inside racks, custom AI server designs needing advanced connectivity. All these represent new growth avenues for them.
And how do they plan to outpace industry growth? What are the levers?
Tech leadership staying ahead on innovation, expanding the product portfolio, increasing the dollar content per server, winning key designs in high-growth AI platforms, strong customer and ecosystem relationships, focusing intensely on the AI cloud segment, and that accelerated R&D investment.
Those initial shipments of Scorpio P-Series and Aries 6 for merchant GPUs, why was that so significant?
Huge milestone. Validates their PCIe 6 tech in the real world, marks entry into a key high-growth market. It's a catalyst for revenue ramp, increases their potential revenue per platform, strengthens their competitive stance, builds a foundation for broader adoption, shows the tech is moving from lab to market.
Are they expanding beyond current products and geographies? Any signs?
Product-wise, definitely expanding.
That.
Aries 6 gearboxes, PCIe 6 over optics development, UALink, Scorpio X series coming, Leo CXL, lots of new segments. Geographically, their focus seems to remain on North America, Europe, Asia Pacific. Q1 showed strong Asia revenue. So expansion seems more about product breadth within existing key regions rather than new geographic frontiers right now.
What's their view on the growth trajectory for PCIe versus Ethernet solutions?
Very positive on both, fueled by AI and cloud. PCIe side Aries, Scorpio, Leo, UALink, optics driven by speed needs, PCIe 6, CXL, and scale-up architectures. They report strong demand. Ethernet side Taurus, maybe future Scorpio Ethernet driven by scale-out networking needs, also reporting strong growth. They want a portfolio to cover all bases.
And being part of that NVIDIA Blackwell MGX reference design, how big a deal is that?
It's huge. Accelerates customer time to market using Blackwell. Ensures performance and interop with NVIDIA's chips. Strategic alignment with the market leader. Massive endorsement. Showcases their PCIe 6 tech widely. Drives Scorpio adoption. Embeds them right within the top AI accelerator ecosystem. Very significant.
Lastly, on strategy, any buzz about them being an acquisition target?
Some general market chatter was noted in research earlier in 2025, but nothing concrete or specific from analysts in the materials we reviewed. You could argue they're attractive leader in a hot niche, key tech IP, strong customer eyes, high growth, but it's purely speculative at this point.
Okay, let's briefly touch on management and governance. Who's leading the charge?
CEO and co-founder is Jitendra Mohan. His vision is clear. Remove data bottlenecks, make Astera the premier AI cloud connectivity provider, own the connectivity for the whole rack. He emphasizes product expansion, design wins, new solutions like Scorpio and UALink, and outpassing industry growth via R&D.
There was some news about insider selling recently.
Yes, there's been notable net selling by key insiders, CEO, COO, other execs, directors in the months before early May 2025. Some were automatic sales under preset plans, but overall significantly more selling than buying over 3 and 12 months prior.
What should listeners make of that?
It's information to be aware of. Insider selling can happen for many personal reasons, diversification, taxes, etc. It doesn't automatically signal a negative company outlook, but it's something investors often track as part of the bigger picture.
Who else is on the key management team?
Besides the CEO, you have Sanjay Gajendra, president and COO, also a co-founder with lots of semiconductor experience. Casey Morrison, chief product officer, another co-founder focused on interconnects. Mike Tate, the CFO, veteran from places like Annapurna Amazon, Marvell. Thad Amora, chief business officer. Philip Mazzara, general counsel. Plus other SVPs, VPs, a team with deep industry roots.
And the board of directors.
As of April 2025, Manuel Alba is chair. Also includes Craig Barrett, Stefan Dijkerhoff, Sanjay Gajendra, the COO, and Michael Hurlston. They provide oversight on strategy and governance.
So wrapping up this deep dive on Astera Labs, what are the main takeaways for potential investors?
Well, they're right in the thick of the AI revolution, providing essential connectivity. You see strong growth, tech leadership in areas like PCIe 6, key partnerships like NVIDIA. That's the bull case.
And the flip side.
High valuation is definitely something to weigh carefully. Competition is increasing, and they are heavily dependent on the AI and cloud markets continuing their rapid expansion.
What are the crucial things investors need to watch going forward?
Definitely track UALink progress and adoption. Watch the production ramps for new products. Scorpio X Series, Leo. Can they sustain that impressive revenue growth and those healthy margins? How do they handle the competitive pressures? And of course, keep an eye on the overall AI infrastructure market trends.
Lots to monitor. Okay, a final thought for you, our listener. As AI continues to evolve at lightning speed, what does the future of high-speed connectivity really look like? And where will Astera Labs ultimately fit into that critical infrastructure layer?
A fascinating question to ponder.
Indeed. Thank you for joining us on StockExplorers for this analysis. If you found it valuable, please do subscribe, give us a like, and hit that notification bell so you won't miss our future deep dives into the companies shaping the market.